Since the beginning of this year, US stock market has tanked badly. NAsdaq has tanked over 30% and S&P 500 is down 20%. Now I'm sure all of you would be aware about the culprit for this market fall. It's rising inflation. Inflation in the US reached 40-year high due to high liquidity injected by US Fed during COVID pandemic with near zero interest rates. On top of that, the Russia-Ukraine war resulted in oil price jump to crazy high levels that even fueled the rising inflation. And finally, US Fed had to take the aggressive measure to control this crazy inflation. Hence, US Fed is now raising the interest rate to suck out the liquidity in the market. And this has resulted in sharp fall in the stock market. Now the question is, can the US stock market fall further? Well, we cannot deny the possibility of further correction. But that doesn't mean NAsdaq will become zero. The problem is that when the market is rising, we get overexcited. And when there's a correction, we feel like it is the end of the world. So in this video, I want to discuss about investment in US market and try to answer all your doubts regarding US stock investment. By the way, there's a mega giveaway in this video. So watch this video till the end. If you look at last 20-25 years of US history, there have been three major market corrections. First one was dot-com bust in year 2000 when NAsDAQ Composite Index that tracks the top 100 companies of US tanked nearly 75%. Then second big correction was in year 2007 when NAsDAQ tanked nearly 50%. And third big correction was during COVID when NAsDAQ tanked nearly 30%. However, every time US stock market tanked, it recovered strongly. And over the last 20 years, NAsDAQ has jumped from levels of 1200 to current levels of 11,000. The question is, can it fall further? Now in the short term, stock market movement would depend upon inflation data and US Fed interest rates. And there are possibility that we can see further correction in the US stock market. But in the long term, all I know is that US has been a strong economy and will remain a strong economy. It is the home of some of the finest companies the world has seen. In fact, BCG, that is Boston Consulting Group, has been tracking the top innovative companies of the world since last 15 years and has recently released its research report, and all top 5 innovative companies are from USA. It includes Tesla at 5th position, Microsoft at 4th position, Amazon at 3rd, Alphabet, which is the parent company of Google, at 2nd position, and Apple at number 1 position. And these companies have been the most innovative companies for many years. They are the biggest disruptors in the world. Look at the way Amazon disrupted the offline retail business, the way Tesla disrupted the automobile industry, the way Apple disrupted the mobile phone industry, and the way Google disrupted the internet industry. Now just ask yourself one simple question. Can these companies shut down? Can these companies go bankrupt? Well, that's impossible unless we get into a world war or something even crazier. In fact, these companies have created such a strong economic moat that they would continue to enjoy the leadership position in their respective sector because these companies continue to innovate. Let me share a few examples. Apple started the smartphone revolution in 2007 when Steve Jobs introduced the first ever iPhone with touchscreen. Fast forward today, Apple has been an undisputed leader and enjoys nearly 60% market share in smartphone industry in the US. That's sheer dominance in the most sought after industry of the world. Not only in the US, Apple holds significant leadership in other developed countries. For example, in the UK, Apple accounts for nearly 50% market share. And the craze for iPhone is highly increasing in developing countries like India. The interesting part is that Apple is not only the leader in smartphone segment, it is also leading the new emerging wearable industry with smartwatches and AirPods. Apple Watch has captured 36.1% market share in the world, which is 3 times more than the second largest competitor Samsung. And these categories are only going to grow. Apple has also launched HomePod similar to Amazon Echo. It is also working on new innovations like augmented and virtual reality based smart glasses. So growth potential are immense. No wonder Warren Buffett company Berkshire Hathaway has the highest allocation in Apple stock, which is around 40% of its total portfolio. In the recent correction, Apple stock has tanked nearly 25% and currently available at a P ratio of 22. Then look at the dominance of Amazon in the e-commerce industry. Today, Amazon has 41% market share in the US e-commerce industry. The most surprising part is that the second biggest player, which is Walmart, is just 6.6%. So Amazon market share is nearly 6 times the market share of second biggest player. That's sheer dominance. Amazon is not only leading the e-commerce industry in US but all over the world. Within India, it is among the top 2 players with nearly same market cap of around 31% as of Flipkart. So both these giants hold almost 62% of fast-growing Indian e-commerce industry. Not only Amazon is the leader in e-commerce industry, it is also the leader in cloud infrastructure provider with a global market share of 33%, followed with Microsoft with 21% market share and Google Cloud with 8% market share as of Q1 of 2022. Mind you, the future of online industry is all cloud, where a few giants like Amazon will host the entire data of the world. In last 6 months, Amazon share price is down around 38% from its peak and currently available at a P ratio of 51. Then look at Google. Again, not just a leader in one country, but leader in every part of the world. Its search engine accounts for more than 80% of total desktop search globally. In India, Google has market share of 94.19%, US has 79.8% market share, UK has 84.2% market share. That's crazy dominance. Within mobile search, Google holds 98.78% market share in India. Google Android operating system for mobile is world leader with 71.45% market share, followed with Apple iOS that enjoys 27.8% market share. Interestingly, all these companies are leader in their sectors that have very bright growth prospect. Be it smartphones, smartwatches, cloud storage, e-com platforms, search engine, mobile OS, and the list goes on. Year to date, Alphabet share price is down around 25% and currently available at a P ratio of 20. Now that there is a correction in the US market, is it the time to exit or an opportunity to invest in these world leaders? I will let you decide. In fact, apart from these FANG stocks, there are many great companies in the US that have huge return potential. Companies like Salesforce, Nvidia, Airbnb, Shopify, and the list goes on. Personally, I am utilizing this opportunity in the correction in the US market and adding these quality stocks in a systematic manner using my INDmoney app. Interestingly, INDmoney allows you to invest both in lump sum and SIP mode. So you can invest a small portion of your money in the form of SIP in these US stocks. INDmoney has recently launched this feature to invest in US stock in SIP form with as low as Rs 500. Just to give you an example, if you had invested just $10 in Apple on a monthly basis in last 15 years, then you would have invested a total of around $1,800 and that amount would have become $17,000. In Indian rupee, you would have invested nearly around 1 lakh and today that 1 lakh would have become 13 lakh rupee. That's nearly 13 times return in last 15 years on your SIP investment. That's the power of compounding. One of the reasons for this great return is also due to the fact that dollar appreciates over time as compared to rupee. For example, 15 years ago, $1 was equal to 40 rupee. Today, $1 is equal to 79 rupee. That's more than 90% increment in your investment over the last 15 years just in currency terms. And this high dollar value has high probability to increase in the future. So investment in US market not only gives the benefit of share price increment but also gives the benefit of dollar appreciation over rupee. All you need to do is identify great stocks and utilize this opportunity in falling market to invest money by setting up SIP. No need to worry about how much US market will fall, what will happen to your portfolio, etc. If you are a long-term investor, then you will create wealth from the stock market. Another benefit of investment in US market is that you can invest in fractions. For example, one share of Alphabet Class A, which is the parent company of Google, is at levels of 2,180. In Indian currency, it's somewhere around 1.7 lakh rupee. So obviously that's too much of money. But you can buy fractional shares for even $1. Now there are multiple doubts regarding investment in US market, especially regarding the charges. So let me share my experience with INDmoney. First of all, the best part with INDmoney is that there is no commission on buying or selling stock. There's no paperwork to open the account, or basically there's no account opening fee or maintenance fee. And there's no flat charge to load the US account. INDmoney also gives you the best currency conversion rate. With most banks and brokers, when you convert INR to USD to invest in US market, you end up paying a currency conversion charges. For example, when you make a transaction, you will see multiple options of banks. For example, HDFC Bank has a fixed conversion charge of around 700 rupee, ICICI has charge of 1,180, etc. And you will get the most recent USD to INR rates. Now, once you load your US account, you can start buying and selling US stocks without any charges. Yes, there are no charges in buying and selling US stocks until you transfer that money back into your Indian account. So let's say you invested in US stocks for a few years and generated decent return, and now you want to withdraw the money into your Indian account. In that case, you have to pay a small fee, and currently this fee is just $5. I remember last year it was around $11. So INDmoney has reduced this fee significantly, and it is the lowest in the industry. Now it is time for giveaway. If you sign up on INDmoney from the description link and fund your US stock account, you will get stocks of Apple worth Rs 750 for free. Now let us look at how taxation works on US stock investment. If you sell the shares after holding it for less than 24 months, that is 2 years, it is classified as short-term capital gain and it is taxed as per your tax slab. So if you fall under 30% tax slab, then there would be 30% tax on profit. And if you fall under 20% tax slab, then there would be 20% tax on profit and so on. And if you sell your shares after holding it for more than 24 months, then it is classified as long-term capital gain. And there's a flat tax of 20% plus education cess. Another common question is, how safe is the money? So every company in India has a US stockbroker partner. In case of INDmoney, it has partnered with DriveWealth, which is the member of SIPC, that is Securities Investor Protection Corporation, that protects security and cash in your account up to 500,000 USD, of which 250,000 USD is in cash. So you don't need to worry about it. Your money would be safe. What are the trading hours? So just like in India, we have a trading time between 9:15 to 3:30. US also has a fixed trading time. But since there's a time difference, the trading time in India to invest in US stock is between 7:30 PM to 1:30 AM. But best part is that INDmoney allows you to place orders in non-trading hours also. It would be executed during the trading hours. A final question I want to take is, how much money can you diversify in US market? Well, personally, I invest somewhere around 5 to 10% of my wealth in US market. That helps me diversify my money and not just depend upon Indian geography. So you can also consider investing 5 to 10% of your wealth in US stock market, but make sure that you do your research before investing your money. So in this video, we discussed about investment in US economy. This correction in the US market has created a great opportunity to invest in world leaders at discounted price. Do not worry too much about the market fall. If the market falls further, it would make the stocks even more attractive. Just stick with your financial goals and invest systematically in the form of SIP. US investment gives a great opportunity to diversify your money, and you can also get the benefit of dollar appreciation over rupee. Now tell me in the comments, are you investing in US stock market? If yes, how much? And if you want to explore INDmoney app, I have provided the link in the description. There are more than 4 million Indians using this app to invest in the US market, as well as one-stop solution to keep a track of their total net worth. And remember to fund your US stock account to get free Rs 750 Apple stock. I'll see you in the next video. Till then, take care.